there's only three options here. This is the start of a bear market. This is a pullback in a bull market, or this is the end of a 4-year cycle. I feel very convicted that this is not a bear market. So let me just on the record, this is not a bear market. 20% chance, 30% chance that 4-year cycle's over, and a 70 or 80% chance. This is just a bull market pullback. This episode is brought to you by Scale, the next evolution in layer 1 blockchains. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. Thanks to Scale for making today's episode possible. What's good?
Not much. It is one of those weeks, just months. It's felt like a blur. The time, it's the best. It's the best. It was the best of times, or the worst of times. I'm looking at my timeline, and it's the polar opposite. On one end, I'm seeing incredible headlines, the SEC dropping pretty much every suit for every company. You have major companies like Robinhood, Stripe, BlackRock, doubling down, Bank of America, Brian, the CEO, just talking about stablecoins. Yeah. And then you look at the charts, and I don't look at price. I have zero time to look at charts, but I could tell just from the timeline in crypto. And so it's very negative out there, isn't it?
It is extremely negative. I mean, the fear and greed index, which is kind of a pithy, index, obviously, but it's it is kind of telling it's at 10 out of 100, which I haven't seen it that bearish since
Luna,
Black Friday even Luna was higher than 10. I think it was Black Friday of COVID, basically, or Black Thursday.
Wow.
Yeah. It's dark out there. I tweeted about having fun, and people were like, who the hell are you to tell us to have fun? I was
even someone what surprised me the most? Eric Voorhees.
What did Eric tweet?
I saw a tweet recently. He says I was feeling depressed about the markets, and then I remembered that Ross is free. Heart emoji. Zoom out.
I just don't get why people are depressed. Let's jump into the market. So right now, I should have pulled this up beforehand, but what's Bitcoin? So Bitcoin's at 84. Sol is down to, is it still at 140?
135-ish?
137, right? So Sol's down 50%. Bitcoin's down 50. What is that math? 15%. People are just panicking on the timeline. What do you think? First off, what do you think is causing the prices to do this?
I think there was I think we talked about it in that last pod, which is Trump, the meme coin launch, Melania, Millet, and the Bybit hack. The culmination of all that just was kind of the last push. Look, traditional markets are also down. So we can read a lot into Trump and the sucking of liquidity, and exposing what has been bad in crypto for a while. But markets have also been really soft. There's macro worries, there's tariff concerns. I went coming into the year thinking that NVIDIA was going to be the single most important thing to watch this year, and NVIDIA hasn't performed as well. So I'm not a macro expert. I can't explain or pinpoint there's correlation. What's causation? I don't know, but objectively, zoom out. When Bitcoin was at 50K and you were telling me, hey, listen, if in 12 months it's at 85K, you would have been oh, that's great.
Great. Take that all day.
It's always the anchoring effect. It's you have to reset. What you expect this thing to go up in straight line? Seriously, how even someone like Eric, how many fucking years have you been in crypto? It's just you don't expect things to do just up and to the right. It's been a phenomenal 2.5, almost 3 years now in traditional markets. You can't expect the market to continue to go up indefinitely.
Yeah, I thought I remember tweeted this. De Meester, who I feel a lot of new entrants in crypto don't know him, but he's a Bitcoiner back in the. He's a Bitcoiner and runs a fund and stuff. I just love this. It was back in November, right around the election. He said newbies will be adamant that 100K is the top, and most likely make Bitcoin sales that they'll deeply regret. Beware the wall of worry. Nothing goes up in a straight line. We could go to 110K, then back to 80K, and then fly to 200K. And then he just quote tweeted it and said, "We hit 86K today." And it's just a good reminder. Like there, if you think about I think the closest comparison in my mind is okay. So let's talk about the big question on everyone's mind. Is the 4-year cycle? There's only 3 options here. Bear market. It's a bear market. This is the start of a bear market. This is a pullback in a bull market, or this is the end of a 4-year cycle. You kind of got to select one of those things. I feel very convicted that this is not a bear market. So let me just like on the record, like this is not a bear market. Maybe 20% chance, 30% chance that like 4-year cycle's over, and like a 70 or 80% chance this is just a pullback in a bull. This is just a bull market pullback. And for anyone who's around in 2021, people are very quick to forget. In the middle of 21, Bitcoin drew down 56%, ETH drew down 61%, Sol drew down 67%, and a lot of other things in the middle of the year, in the middle of what we look back and think 2021 peak bull market, they drew down like 70 to 80%. And I just think people are very quick to forget that.
Right? Yeah. I'm trying to look at like there's a couple of tweets that I saw that I can't seem to find right now, but like every cycle there's a number of drawdowns. I think it was I'm looking at one here by Milk Road. Like so, Bitcoin's down. That was like February 26th or yesterday. In 2017, Bitcoin witnessed 12 similar pullbacks. He's referencing that it's down 22% last month. 9 similar pullbacks in 2021. So it's like it's a volatile asset class. Like,
here's a 2021 or here's a 2017 one, which was price goes up, Hearn dump. I don't even know what the Hearn dump was actually. Then there's Bitfinex hack, and Bitcoin fell from 850 to 650. People's Bank of China regulations. Bitcoin went, quote unquote, crashed from 1200 to 800. ETF gets denied, goes from 1450 to 900. Bitcoin Cash drama goes from 3000, down to 1900. So I just like, I don't know, these, you can't have the, Mark Yusko would always say volatility is a good thing. I remember when, in the early days of starting Blockworks, we would actually work out of Morgan Creek's office with Pomp and Yusko. And Yusko said, I would ask him, like, just because he was a student of the markets and I was like 23 and I really didn't know anything. And I was like, how do you talk to these institutions about Bitcoin? And he would always say the most misunderstood thing is that volatility is a bad thing. He said volatility is just volatility. It's amazing to the upside and it sucks on the downside. Volatility is neither good nor bad. It is just volatility. And you can't have Bitcoin went up 100% in 60 days after Trump got elected. You can't have that and not have these violent pullbacks too. So,
yeah. I was looking at like just a couple of reports I got from like banks and sell side, research analysts, and try to piece together the, macro and what's causing the pullback. Everyone started to put like very sophisticated answers, and TLDR, everyone says that macro data is weakening, policy uncertainty is increasing. Mexican Canadian tariffs go live, yada yada yada. So I guess like people. Well, there's a couple of phenomena. I mean, there are certain assets that have been like severely punished. Like, Bitcoin's down 22%, but some of the alts are down 80, even more. So if you're sitting in those, like, you're hurting quite a bit.
Yeah, I thought Quinn had a good note. If you want to actually think about like what the macro folks are thinking about the markets today, it's I'll just read some of the stuff from Quinn. It's the Fed, Treasury, and broader government have provided further guidance on their policy priorities and is not near-term market friendly. If Doge is to achieve its goals and reduce the budget deficit, it will cause a near-term economic growth problem, as the government is the number one driver of U.S. job growth. The go around there is a risk that unemployment rises as Doge cuts take hold, but the government doesn't respond as much or quick enough with stimulus to soften the blows. Right, so that's about Doge. Then there's the near term. He talks about near term liquidity. Says the near term liquidity outlook is also not very attractive, with the first Fed cut months away and a depleted RRP liquidity facility. I don't actually even know what that means. The dollar is weakening for bad reasons, slowing growth, not good reasons. Fed liquidity. It's important to understand This, given the dollar strength, has helped to attract inflows to US assets over recent years. Combined with record high valuations, the risk reward probability distribution is becoming increasingly negatively skewed. Crypto momentum and sentiment is worsening. Who is left to buy? Who hasn't already? So I think that's a good insight into like the mind of a crypto hedge fund that trades very short term, I would say. I know Quinn very well, very good trader, but his time horizon is weeks, I would say. When I would say your time horizon, my time horizon is many years.
Right.
Like someone asked me, I own 4 stocks. I own Coinbase, Robinhood, Alibaba, and Nvidia. And Robinhood is the second largest stock I own behind Coinbase. And someone asked me like, oh, there's all these short-term dynamics. And I was like, I'm not thinking about Robinhood on like a 3-month time horizon here, right? I'm trying to, buy these stocks and just hold them for 5 to 10 years. So I think and the reason I call this out is one of the things that I think drives this like fear on the timeline is people, the big names on Twitter, the Ansems and Quins and things like that, they're trading on week to week time horizons. They're not just sitting in these things and holding them like maybe you are, like I am. So
yeah. Omar from Dragonfly sent me a report by Morgan Stanley on probabilities. I talk about a lot about thinking in probabilities.
Yeah, of course.
I'm trying to pull up the report, but it's just fantastic. I tweeted something that so it's like a 30, 40 page report. And I've read a few reports from this guy, and he's very, very insightful. I want to pull up this particular insight, if you bear with me. Research shows that investors commonly overprice stocks with lottery characteristics because they overweight the probability of a high payoff. And like, I guess like it got me thinking around, okay, does everything in crypto have lottery characteristics? Yes or no?
I think right now, because people don't look at the fundamentals, but as the fundamentals actually become, I know it's a bit of a meme, but as fundamentals become more important to crypto assets, which I really, really, really strongly believe they will, and we can talk about that if it's interesting, then we move away from this lottery idea. That's my take.
But like, okay, so like the marginal the person that's buying Bitcoin, are they buying it because it has lottery characteristics?
I don't think Bitcoin's become that that anymore. Yeah.
What about Solana?
I also
Ethereum.
don't think Solana's that anymore. And same with Ethereum.
Okay. Got it. Let's go down or higher up the risk spectrum. AI coins.
Yeah, that becomes a lottery ticket.
What about memes?
Full lottery.
Yeah. And so, yeah, I agree with that. So I think like coming into the year, like, we're on the record saying that this is going to be a good year. I don't know if we're in a bear market. I mean, technically speaking, we are, right? If you were to like, what is the definition of a bear
by the technical definitions of a bear? I'm talking more like the crypto cycles of a bear.
Yeah, in crypto, like we don't consider this like a bear market because we've seen multiple pullbacks during this 4-year cycle, which has become this sort of standardized thing for all normies come out there listening. And so people always look at the rainbow chart, the 4-year cycle, the super cycle. But yeah, there is far more volatility in this asset class than in others. But yeah, I think there was a lot of expectations. The thing about the casino is that I think it was Travis from Ikigai who had quite a sober take about what's happening in the quote unquote casino. And he said some of the effect of how toxic meme coins have been. And he compared it to like, imagine walking into a casino and the casino drops a little bit of fentanyl in every drink. Initially, everyone's like really hooked, and then everyone kind of drops dead. And then
so dark.
It was such a very sober analogy. But I mean, I'm not suggesting that that's correct, but it just makes you think about you always, when you think about markets, I'm sure Quinn, I'm sure traders obsess about this far more. It's what's the composition of the incremental buyer? Is it an institution stepping into buying the ETF? Like, what are they buying? If $100 flow into allocate to crypto, where's that going to go?
Yeah.
And now I think you have many, many different products. You can buy the ETFs, you can buy micro strategy stock, you can buy options and other derivatives to express that view. I technically buy stuff like Robinhood that gives you crypto exposure. You can, of course, allocate to crypto funds. You can, go to pump.fund. You can go to, and but yeah, I guess looking back, like I don't know if there's a perfect way to do this. I know you guys have research aspect, but like it would be nice to just understand like where the flows are coming from.
Yeah.
And because if everyone's just coming to the casino, then that I think is it's just a very different flow that is like the duration of that flow is very short. The LTV of that flow is really short. And that I think impacts how assets are priced. Because if everyone is buying the lottery ticket, then of course there's going to be more volatility in markets. But, of course we could also talk about, like in prior episodes, I've talked about open interest, how much open interest is out there, how much leverage is in the system. There's a lot of things that I think you can like look at to infer how the market is positioned.
Yeah, let me throw out my idea. And sorry about the. I don't know if you can hear the heater clanging away in this New York.
You mean the rats going through the pipes?
Yeah, I think until April, I think we're just stuck with this. This episode is brought to you by Scale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Scale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Scale Network. Thanks to Scale for making today's episode possible. This episode is brought to you by ZKSync. In 2024, ZKSync took a step toward a multi-chain future by transforming from a single L2 into an ever-expanding network of ZK chains, the Elastic Network. To onboard the whole world into crypto, many specialized chains must be able to coexist, work together, and share liquidity. Institutions and global financial leaders choose ZKSync for unmatched security, scalable infrastructure, better onboarding, gasless transactions, and privacy-first design. Join over 20 chains, including Abstract, Sophon, and Kronos in the Elastic Network today. Behind ZKSync is the ZK Stack. It is a one-stop platform for building private blockchains on Ethereum. The stack solves all the typical privacy, regulatory, user experience, and deployment concerns of blockchain without compromising performance or security. Join the Elastic Network today at zksync.io/empire. Thanks to ZKSync for making today's episode possible. Probably a mid-curve take on this, but I think that okay, who's the buyer? There's only one buyer in the market today, and it's Michael Saylor. There's one net new buyer in the market, and it is Michael Saylor. Mm-hmm. And that is why Bitcoin, I mean, he's bought $20 billion of Bitcoin in the last, I think, 60 to 70 days. He's bought $20 billion of Bitcoin. And that is why Bitcoin remains at like 85 to 90K. If Saylor wasn't flooding, pumping $20 billion into the market, Bitcoin probably is actually down closer to like 60K. So I do, first of all, I do think it is important to recognize that. The second thing that I think is happening is there are, like you said, all these other things that retail can use to use the word lottery ticket, like to buy lottery tickets, right? It used to just be like, let me buy the coins, let me buy the alts, let me buy the new L2. And now it's like, I mean, you can just in your Robinhood app, buy Bitcoin options. You could go 10x levered long on Bitcoin. That it's like, why would I go buy the new L2, which it's like the last cycle, the lottery tickets were the altcoins. Now the lottery ticket can still just be on Bitcoin, right? You can just do like, you could 10x lever long on Bitcoin right now inside of just Robinhood with options. I mean, I think I haven't done that, but I'm pretty sure you can just do that. Or you could do the same with Coin or Hood or something like that. And if you really want the lottery ticket, you can just go straight to the memes. Now that the memes have died, I actually think it opens up a really, there's two things that I think could pull this back. So the memes are dead right now. Like no ifs, ands, or buts. The memes are dead right now. I think actually that will change, and I actually do think memes will come back. And I'm sure a lot of people disagree with me on that, but so the memes are dead. But crypto native capital needs to park their money somewhere, and they still want the upside that's beyond Bitcoin, ETH, and Sol. So I think they'll start looking at other things. So where do they start looking? I think they start looking, and I know this is a total meme and like mid curve take, but like I really do think they look at things with fundamentals. And the reason that it will start happening now and that it couldn't happen anytime in the past is because look what's happening with the SEC. The SEC is dropping. They just dropped their suit against Consensus today. Gemini earlier this week. Coinbase obviously was a massive one. But the most important one in my mind was Uniswap. They dropped their case against Uniswap. And what does that mean for these tokens? It is the most exciting thing right now because why don't these tokens have fundamentals? Because the government and the agencies haven't let there be fundamentals.
Yeah.
So
By
it's
the
like,
way, I was looking at a tweet by Joseph Lubin. The SEC just dropped their suit against them as well. It's like
right.
literally every single action that the SEC brought against a crypto company has been dropped in the last like 72 hours.
Right. So, I
Or
mean,
like
let me
last
just
week, Coinbase,
like let me
Robinhood,
just pull this
Consensus.
up. I'm going to show you just because I'm showing you Radium because this is the most recent dashboard that we just created. But Radium, I mean, let's look at them. All right, I'm looking at the monthly profits of rate, like 64 million in profit last in January. Swap revenue, right? Like uh quarterly swap revenue in Q4 was 90 million, right? These things are profitable, incredibly profitable businesses. You could actually argue that's one of the most valuable things that crypto's created is the ability, if SaaS made it so that you can create companies with 10 times less employees, 10 times more profitable, crypto just made it so you can create companies even 100 times more profitable with 100 times less employees. And
I want to
that's
reference
so
this.
powerful.
Yeah, there's a great tweet by Ryan Connor from your research team. I just shared it with you. I think if you want to show it on the screen.
Sure.
Um,
Hold, please. All right.
and he says something to the effect of like everyone's saying, "Oh, Millet Libra killed, um, you know, profitability. Solana's going to zero," kind of thing. And he's like, "Well, no. Like, let's look at the data and what you're seeing there is pretty
Mm,
instructive. Like, he's looking at application revenue from Pump, and it's actually, yeah, it's come down quite a bit, but it's not, you know." Pretty much says like 15% of all crypto app revenue has been unchanged since Millet, and he's referencing like Pump. So I just think that that's pretty. Um, I guess like you always see people that very quickly try to like yeah correlate or develop some sort of theory as to why the market's down. Um, I don't know. I feel like you always should look at like what's going on in the market, but um, A, I'm of the mind that memes are definitely not dead. Sorry to break it. They're going to continue to be a thing. Um, you just have to always think about like where the flow is coming from. And traditional markets have been pretty pretty battered. So um, the question then is, what is going to cause the incremental marginal allocator to
yeah.
come into crypto?
I think what you're saying is exactly what I thought Ari Paul had a good tweet, which was people, especially funds, are positioned bullishly.
Mhm.
Which actually we should talk about in a second. Problem is we're not getting enough daily fresh inflows to offset the extractions. Not about paper hands, what he's referencing is not about just people selling and being paper handed. He said, in my opinion, there's just not enough new contributors. We need a huge amount of new fiat and daily just to keep prices steady, to offset exchange fees, market maker and arbitrage of profits, on-chain fees, bugs, hacks, etc. Right now, Saylor is it. So that's what I'm saying. Saylor is the only buyer. We do need these new inflows. It's the exact same thing. Yeah, this is what we're saying.
Yeah. I mean, obviously, I've been talking about it here at length, so I don't want to bore people. But the thing that is, if you look at the fee
We
stream,
need a little music for the inevitable inversion plug that is coming. It's like
okay. God damn. I was going to say something about, something else.
yeah, sure. All right.
No,
Well, now I opened the door. You can do the inversion plug.
you see, I'm just, that's like the,
yeah.
no, but like Connor says something like Pump has stabilized. Like
Mm,
their market share has been stable since Libra. So like Pump from like if $100 are generated on chain, the percentage that Pump.fund encompasses of that has remained stable. obviously the aggregate fees have come down in Solana as they have come down in every other chain. He said something that I'm not looking at. Like, I don't think there's no chart here, but let's just take his word for it. And hopefully he can tweet about this. He says ETH revenue has fallen more than Solana revenue since Libra.
Well, here
So
we can pull it up. We've got the data. So
what was that?
let's see. You can see ETH.
Mhm.
And I'm not sure he's right about that. Let's see.
Maybe it's a percentage.
Oh, ETH revenue has fallen more. Okay, so ETH. Let's go to New Year's. When do you want to take it from? Okay, so New Year's.
Yeah, Jim.
ETH was 40. Solana was 63, and now ETH is 17. Solana's 30. Okay, so he's saying the percentage decrease. Yeah, drop is higher.
Yeah, so I mean that's interesting.
Yeah.
Should we talk about the positive stuff? Because like I don't know.
Yeah. Okay. Let me take us into this, because there is it. This is why I'm. Actually, before we get into that, the very last thing I'd say is you said this word expectations, Santi. It's the positioning that is causing people to be bullish, or excuse me, bearish right now. It's the expectations of what we thought was going to happen, and everyone is basically positioned with their portfolios. So I sent this tweet out, which was like, and this will take us into the bullish take, which I said, I'm confused by who's not bidding here. Do you genuinely think the cycle is over? Do you think that Trump won't do everything in his power to pump the market? Do you think pro-crypto regulations that we've waited on for several years will have zero impact? Do you think that you sound smart by pontificating about macro and being bearish? Do you not see every major financial institution, fintech launching crypto products? Do you not believe? It's kind of a fluffy tweet, but actually the most interesting thing were 250 comments, and folks were basically saying, "I've got no cash, brother. I've got no cash." So I think your word that you said is spot on, which is expectations. Everyone was gig along going into this year. As soon as Trump, got elected, everyone basically full risk on, full gig ascend, and that is people are positioned offsides for I think everyone thought short-term bullish right away, and what Trump has done with tariffs has obviously I think probably tariffs are one of the main reasons this market's down. I also think one of the main reasons the market is down is uncertainty, which ends up, funny enough, being, in my mind, is very bullish. Everyone's saying, like, I listen to these macro podcasts. We've got one, Forward Guidance. Everyone's saying, like, get into cash. But the reason they're saying get into cash is because there's uncertainty in the markets. I'm like, there's no uncertainty here. Trump is doing these short-term tariffs probably to try to strong arm Powell to reduce rates. Like, long term, you think Trump is not going to end his first 100 days with the market up? Like, come on.
Look,
right,
I mean, I just want to like, so I was like listening to founders. I go on these like sprints of listening to founders podcasts, and I've been listening a lot to the Buffett and Munger ones, because I read a note like Berkshire Hathaway's, I think he's holding record amounts of cash, and he's been downsizing a lot of positions. And it's something that is pretty impressive. Like they've been like Berkshire Hathaway has been known to like for many years just sit on cash. I think there's like, I don't know if them or some other like hedge fund like held cash for like a record amount, like decades, just waiting for the right market conditions. And like naturally, so like when most people think of holding cash, they're like, it's eating at you, right? It's like I'm not earning yield. I'm being inflated away, and you want to do something. There's like this natural tendency to do something with the money. Fine, okay, speculate, do stuff. But there's just times where just sitting on cash is like a very if you're a fund, you have to kind of be always allocated. It feels kind of dirty to hold cash.
Yeah.
And I think that's always the problem. Like you want to like probably no one has cash out there to bid right now, even though you want to bid. Um, and there's only very few people that just have the discipline to hold cash. Um, and you're right. I mean, it just goes back to the expectation. Like everyone was probably gig along coming into January. It probably didn't help that a lot of funds were not properly allocated over the last 2 years, and they entered some trades pretty late-ish. I say late in a short time frame. A lot of funds probably best believe bought, sold when it started to run up from 100 to 150, maybe caught it at 200, and so they're feeling like quote unquote idiots but they got to look at themselves and just ask themselves, like, where's this headed? Do you have redemptions or do you don't have redemptions? Because if you have a 5-10 year horizon, thesis very much unchanged.
Yeah. Yeah.
But yeah, like
And
holding cash in this asset class never hurts, but it's painful. It's super painful because it rips in your face and you're like, shit.
Yeah, well, we're recording with tomorrow with Pranav and Dave Kulk, and I think Pranav flipped to like all cash in January. I'm pretty sure. And that I think we'll release that episode this coming Monday for folks who want to listen. And I just I want to hear about the conviction to flip to all cash, because in the moment it's so hard. It's one of the hardest things to do. I've never been able to do it in the right way. Okay, let's talk about the bullish stuff. Before we do that, I just pulled up Slack and I'm getting incessantly pinged to say, did you promote DAS at the beginning of the episode? Which I forgot again. So God damn. All right, we have DAS coming up. It's gonna be a banger event. Empire 10, that's your code. Actually, the speaker lineup is insane. It's like really, really. It's okay. Let me read you the speaker lineup. Mohammed Al Arian, who's he's chief economic advisor of Allianz, massive name.
PIMCO,
yeah, PIMCO chairman, I think. We've got Michael Saylor, Kathy Wood, Richard Tang, the CEO of Binance, Novogratz, Brad Garlinghouse, Shervin Pishavar. We just added Tom Emmer today, Caitlin Long, Tolley, Tapiero, Congressman Wiley Nickel, Amy Oldenburg, who's head of emerging markets at Morgan Stanley, Ledger CEO, Mike Cagney, who used to run SoFi, Eric Peters, Jessica Peck from the U.S. Department of Justice, the Mooch, Robbie Mitchnick, who's head of crypto at BlackRock, Joe Lubin, we just added, Matt Hogan from CIO of Bitwise, Stephen Goldfeder. So the list goes on. Like just a very good list. Santi, good crew. I like. By the way, look at this list. Look at these people's headshots, and then look at.
Am I the only one that has
the only one? That's why. Yeah, I think you're the only person with a.
What's wrong with the world?
Non-boring headshot.
By the way, like 2 or 3 years ago, the amount of
everybody
PhDs were like.
Actually, Omar's got a decent headshot. That's not bad.
Yeah.
All right. Anyways, Empire 10. Go get your ticket. Also, the other thing is we launched a new podcast today.
Oh, really?
Yeah, we launched a podcast called Supply Shock. So been trying to hire this guy for like literally 5 years. This guy, Pete Rizzo. He was the first reporter.
CoinDesk?
Yeah, he ran editorial at CoinDesk from 2013 to 2019. And then he went and helped The Street launch their crypto arm. He was editor at large at Kraken. And most recently, he's been chief content officer at Bitcoin Mag. Literally been trying to hire this guy for 5 years. He is amazing. He's like the most crypto OG. He basically started crypto media, is how I think about it. If it just timing was never right, I would call him every like quarter, be like, is it time? Is it time? And finally, end of 2024, we saw this good opportunity, which is what we call internally like the Bitcoin Renaissance. There's just all this amazing stuff happening with Bitcoin. It's like nation states are buying, institutions are launching products, and there's all this cool stuff actually being built on Bitcoin. So yeah, we just launched our first ever like Bitcoin only brand, Supply Shock. Right. So
that's awesome.
All right, back to the. This episode is brought to you by Scale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Scale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Scale Network. Thanks to Scale for making today's episode possible. This episode is brought to you by ZKSync. In 2024, ZKSync took a step toward a multi-chain future by transforming from a single L2 into an ever-expanding network of ZK chains, the Elastic Network. To onboard the whole world into crypto, many specialized chains must be able to coexist, work together, and share liquidity. Institutions and global financial leaders choose ZKSync for unmatched security, scalable infrastructure, better onboarding, gasless transactions, and privacy-first design. Join over 20 chains, including Abstract, Sophon, and Kronos in the Elastic Network today. Behind ZKSync is the ZK Stack. It is a one-stop platform for building private blockchains on Ethereum. The stack solves all the typical privacy, regulatory, user experience, and deployment concerns of blockchain without compromising performance or security. Join the Elastic Network today at zksync.io/empire. Thanks to ZKSync for making today's episode possible.
Yano is always doing the plugs.
I gotta do the plugs.
I appreciate it.
I gotta do the plugs. All right, let's talk about some of the bullish stuff. So, okay, this is why I'm hyped. So let me just pull up some of these. I'll pull up. I think Ryan's tweet from Bitwise might be a good one, good place to start. Which is Ryan Rasmussen. He said he's head of research at Bitwise. He said, so Matt Hogan and I just presented the case for Bitcoin to 350 wealth managers, JP Morgan, Wells Fargo, etc. 53% of them plan to allocate to crypto in client accounts, including 33% in the next 6 months. Meme coin nonsense can't stop this train. And, you know, I know it's like, it's just I've never seen such discrepancy on the timeline between like retail, who's just clearly trading, and like I said, very positioned offsides, versus people who are just zoomed out and like understanding what is actually happening in this industry, which is there's a horde of institutional interest coming right now. And I think right now institutions don't think Bitcoin is stopping. No institution right now is sitting there being like, oh my God, Bitcoin just pulled back from 105 to 85. Like, is the bear market happening? That's a very like weirdly crypto native thought. I think they just say, oh, hey, this is a pretty nice entry right now. Okay, so that's the first thing I was looking at. Second thing I'm looking at is Stripe's letter. So Matt Huang from Paradigm called this out. Just a great tweet. This is Patrick Carlson in the Stripe 2024 letter. Quote, we are already in discussions with some of the world's largest enterprises, helping them assemble stablecoin strategies, such as faster global expansion or easier custody of funds. Boom, you've got the world's largest payment company doing that. All right, let's flip over to Bank of America. Bank of America CEO Brian Moynihan says the bank will launch a stablecoin. It's pretty clear there's going to be a stablecoin, which is going to be a fully dollar-backed. It's no different than a bank account. It's like, okay, so you've got Bank of America, you've got Stripe, then you've got like what I was mentioning too, which is I thought Jonah from 1000X podcast put it nicely. I'm ready to bet the farm on this. Trump is not going to preside over a 2008 style crash. This is not his preferred legacy. Furthermore, he has all the tools at his disposal to prevent one. Thus, if things start to look bad, they don't yet. Buy everything you can with leverage. The second you start to see signs of fiscal stimulus or quantitative easing, I'm like, to me, it's just funny. Like, to me, I don't know about the second part about leverage with the nines.
Skip the leverage and selling the house and the kidneys.
Yeah, maybe don't mortgage the house to buy crypto right now. But it's like, man, I mean, go Bank of America launching a stable coin. Stripe is helping enterprises onboard via stable coins. Bitwise is doing God's work, talking to all the financial advisors. It's like, I don't know. I don't know how you could not be bullish right here.
It doesn't make any sense. I mean, it's like volatility for ants. Seriously. I mean, like, what did you expect? Like, you're coming into a volatile asset class that is in pure price discovery. Of course, you're going to see these drawdowns. Like, I don't know how else to describe it. Like, you should expect to see 40%, 50% pullbacks in Bitcoin, and then you run 1.5, 2, 3 beta on that. Technically, and so you should expect severe drawdowns.
Mm-hmm.
And so you either do one of two things. You hold cash because psychologically you're going to be in a good spot to bid when stuff gets ugly. But if you don't have any cash, you're not going to bid, and you're not going to borrow against your stack at that point to go like gig along. And so it's like people talk about risk and you're like, there's no perfect blueprint to what you should be doing. But if holding, like, there have been times I was actually talking to Pranav about this, like during middle of last year, where things like actually March of last year, where stuff like kind of took a hit. And we were just going through this exercise over the weekend, like, and I was like, I'm gonna hold a little bit more cash. I don't think the fundamentals, like, long term, have changed. I think we ended the year higher, like all this stuff that I've been saying. But I'm like, I just want to hold cash because psychologically I'm going to be a better spot. And if prices go down another, so said differently, like, okay, to put it in perspective on where we are now. So stuff has gone sold off quite a bit. Um, like going into the year, for instance, like I think the year is going to be great. So I have $100. I'm already pretty exposed. My cash allocation, say, is very little, say 0%. I have certain scenarios. One where we go to 150 Bitcoin, Solana, ETH double kind of thing. And so those $100 can go to 150 or 175 or maybe 200 in some sort of probability weighted scenario. And so I run the math and say I can stay 100% allocated. Fine, I capture all that. Great. Then maybe got to figure out when to take some profit and whatever. And but in that process, I'm like, there are scenarios where it comes down quite a bit. Again, factoring in that most likely there will be a time where there's like a drawdown of 30, 40%. And I can say, oh, fine. The problem with doing this scenario is that, like, you pick one point and then you pick another. And then but you have to figure out what happens in the interim, right? Because there will be a temptation. There will be the emotional, like, freaking out when things go really bad, right? When these drawdowns happen. And so when you run that kind of Monte Carlo simulation, whatever it is that you're doing in your brain, you say, oh, well, let's play the extreme scenario where that 100 goes down to 70. You're still going to end the year at maybe 175 if you don't touch that. But let's be real. You're not going to do the trade, log off, go surf, come back like Chris Bernitzky. Most humans will not be able to do that. And so, because you're here, you're glued, right? And so you tweak and you play with different portfolio constructions where you say, instead of being 100% allocated long the market, expressing this view that on a probability, like a expected outcome, you're going to end the year in either between 140, 170 or whatever. But it's really the variance of that, the vol, that you have to look at, because that's what really psychologically puts you in a bad spot. Yeah. And I think it's a difference between holding 0 cash and 5% cash, or 10% cash, or maybe 20% cash. Maybe certainly not 100, but there is an optimal allocation of cash that I think it is very personal. And you just say, okay, in those moments, if it goes to 70, I'm going to have cash. I'm going to feel great. And I'm also not only that will I have cash to bid, but I will most definitely not feel compelled to sell because I have this buffer.
Yeah, what you're really getting at is, even if you can just have 5% cash,
yeah,
it will make you excited when the market goes down. Like, I see. 100%. I mean, so I feel like I'm trying to stop talking about specific tokens because people are just called Blockworks a VC shill if I call out a specific token. But like, there are tokens that I'm buying. Like, I just started buying this week, and what you're saying is, like, for me, so let's use Sol for example. When I see Sol go to 135, I get really excited, right? Because you've got a little bit of cash. But if you have 0 cash, you see all the coins go down, and there's nothing to get excited about. So
there's this great again, back to this report, Morgan Stanley and probabilities, that I'll link in the show notes. So Dan Kahneman and Amos Tversky, these behavioral economists, they have this book, Thinking Fast and Slow. Phenomenal, kind of seminal book on behavioral economics and how humans are incredibly irrational. There's this theory of loss. What is it? Loss aversion. And the basic premise is humans go to greater lengths and feel a loss much greater than a corresponding gain. So if you lose $1, you feel it twice as much as gaining $1. And it's sort of and not only that, but it's like, and so if you take that, then you say, this is what I'm saying, like a 5% allocation of cash like insulates you against that psychological like predisposition of feeling that loss extremely painful. Because to your point, instead of being obsessed about, I'm an idiot, like I was up at 100, I was up 120, then I'm at 70, I should have sold at 20. Like I keep telling myself every cycle that I'm going to take some profit, and just really be in a bad spot. Where, objectively speaking, you should be buying an asset that you loved at 100 that is now at 70. That's a discount. You should go and buy there. That's like the, but if you don't have any cash, you can't do it. But even if you have 5-10% allocation of cash, then you flip from a negative bitter state to avoid this like loss aversion that is always going to kick you. It's always going to drag you. The way I practically do that is I set just stink bids on an exchange. I'm like, in this moment in time, if I can get this asset at 100 or this asset at a 20-30% discount, I'll buy. But
Yeah.
I think of like the number of units that I want to have in a particular asset. So I want to have X amount of units of Bitcoin, X amount of units of Ethereum or Solana or whatever project. And so I said, I have 1,000 units right now. I can buy the same 1,000 units at all these different price points, and I'm going to allocate like 20% of the cash position, 20% of the like a cash position that I have on principal today. And so that's how I like back into having cash always available to hit that, to lift when the market draws down and there's a whip, like a cascading liquidations. It's probably not perfect. People might be listening like, why is he just like sitting? The cash is sitting there in an exchange. Why are you not earning yield on that? And that's honestly a product that like some of these exchanges could really offer. Like just if you have like that USDC parked or USD
Well, you
parked,
can do it on Coinbase. I think if you just sit on
yeah,
USDC, they give you a
yeah.
couple.
But I'm not sure if you're sitting on USDC when you put in the bid. I think you're sitting on USD. I don't know if they'll share the yield
Oh, I
or like
see.
they'll
Yeah, yeah.
sweep. But like, I'm sure
So,
there's like a sophisticated strategy to do this. I'm like, fine. I mean, I'll
yeah.
just hold cash.
So let's make it a little more tactical. So what are you putting in bids right now? Do you put in just like a market order? Do you have
Yeah, I put in
limit
bids.
orders at lower prices? What are you doing right now?
Yeah, limit orders. I always have some limit orders for all the assets that I really like. I have alerts.
Are you comfortable? I know people know that you like Sol. I don't know if you still like Sol actually, but what do you like right now?
Yeah, very much just continue to add to my portfolio. It's very much concentrated, so I do like Sol. Um, let's just talk about Sol because I've talked about Sol extensively. There's other assets I like, but like Sol is at 138. It is basically you're getting Sol at the same price that you'd have gotten at October of last year.
So are you buying at 138?
Not right now. I'm not adding to the position because I am like I I I bought a lot for during the FTX
Mm.
sale, so I'm unlocking, but I'm not like touching that. I have some bids, limit orders. Let's see. This is on a percentage basis. 120, like basically like in 5 increments. It's like very simple. One like
120, 115, 125.
135, 130,
Yeah.
125, 120, 115, 110, 105, 100, 90, like all the way down to 80.
Mm. What other assets do you have that for? Either stocks or crypto.
Coinbase, Hood. For stocks, I do this product that I was talking about in the other podcast.
Yeah, yeah.
But so I always on a week like this one, I do a lot of stuff to capture the higher vol because things are priced better.
What do you think about the fundamentals thesis in crypto right now? Are you looking at tokens with, with fundamentals? Do you get excited about that? Do you think maybe it comes but not yet? How do you think about that idea?
I mean, it's gonna matter. I've been realistic. Like um like Maker, for instance. I don't know. That's always been like the fundamental trade, right? But
Yeah.
it never has really materialized. Shout out to Ben. He always was like, but look at Maker on a P basis. I'm like, yes, 100%. Um, I yeah, no, not really. Like I'm very concentrated now, especially now that I'm building. I will have less time to just be tactical.
Yeah.
So or just so I'm very I will. Let's just say I did a technical RFP for the last like 2 months and I'm looking at different protocols, different look to interacting with different teams of like where should I build. I mean, I would be lying if I didn't tell you that I've considered swapping some tokens for Avalanche. I just think that's where I'm building. So there's a reason why I picked it. And so I have increased my allocation to Avalanche as a protocol. And look, none of this is legal, whatever advice, but
Yeah, yeah.
there's no surprised.
I was wondering. I was wondering if you were going to start, if you had bought Avalanche.
Yeah, and the swap is very simple. Sol for Avalanche. Doing that trade. I just think that more projects off the grid, far away, obviously inversion, like more and more teams will appreciate launching their own chain. I came away very impressed by the quality of their team. I think their BD muscle only becomes more important when traditional institutions are willing to interact and launch maybe their own chain. I think they'll do it there. We talk like I guess you could also say other high throughput blockchains are interesting, like Aptos, Suisse. You have Monad that is coming. You have Bera. So there's like other ways to express that thesis. But I think about that a lot. Like, okay, what is the moat of Solana? Is that asset fairly priced? In the same way that I thought, and I couldn't explain, like, I still can't explain the relative valuation of like Ethereum to Solana. I continue to believe that spread only compresses based on revenue, based on metrics, based on projects launching there. Like that thesis in type. But then you also, I've thought a lot about, okay, how does that relate to the valuation of something like Avalanche relative to Solana? You know, you have to believe that all of these are on an absolute basis are worth what they are, which is a separate conversation on your point around fundamentals. And my point is none of these networks are worth what they are on a discounted cash flow basis. None of them. It's like you can do the craziest assumptions on a 10-year period. Like when you're doing a financial modeling, cash flow for 10 years, you cannot justify. You have to basically come up and derive some sort of terminal value valuation. Yeah. Terminal value, the component of when you run a discounted cash flow in banking, private equity, whatever, or a hedge fund doing analysis, like you're on discounted cash flow for 10 years or whatever, and then you have like a terminal value assumption of this asset's going to continue to grow and compound at X rate, and this is the discount rate, and yada, yada, yada. And this is the, and so in none of the craziest projections you could get to, the asset be worth what it is, without believing that like at least 90% of the valuation for all of these networks is based on some terminal value assumption that is pretty wild.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. Hey everyone, Jason here. Wanted to just take a quick break and highlight everything that's been going on in the Mantle ecosystem. In just 1 year, Mantle has seen its TVL surge by over 1,100%, now reaching $1.69 billion. That's just such a crazy amount to think about. More than 225 protocols have made Mantle their home, while the platform's Eco Fund has invested $38.5 million in 51 pioneering projects. Through strategic partnerships with Bybit, including MNT as collateral, supporting Athena to scale, and the first Ethereum L2 to integrate Ondo Finance, they just continue to be on the bleeding edge of L2s. Be sure to stay up to date with what's going on by giving them a follow on X at 0xmantle. Special thanks to the incredible Mantle team for sponsoring today's episode. AO, the hyperparallel computer, is here, a decentralized supercomputer built on top of Arweave's permanent data storage. AO offers infinite parallel processing and leverages web infrastructure HTTP for unprecedented scalability, addressing limitations of existing blockchains. AO smart contracts support large programs, including LLMs, and can execute autonomously, enabling new classes of decentralized applications. Utilizing TEs for secure computations and features a 100% fair token distribution to Arweave holders and bridge depositors, emphasizing community ownership. Thanks to Arweave for making today's episode possible. You can find out more by clicking the link in the show notes. Do you think that when the institutional crowd comes into crypto and these hedge funds come in and it's not all just venture stuff, they will try to build models around these things. And so maybe they get more excited about Aave and Uniswap. I'm making those two names up because they're generating fees, and maybe because the SEC lets them pass those fees back to the token holders, and they get less excited about the new L1.
Excellent point. Yes. Yeah. I mean, that's really we haven't really been able to express or call these things what they can be. And so we've talked about fee switches and value accrual to these tokens. I mean, quote unquote governance tokens, but in a world where you have more regulatory clarity and I mean, yeah, like some analysts have started to compare Uniswap with Coinbase, right?
Yeah.
That comparison, it's like on a volume basis or on a per employee basis, on a, all of that computes, right? I think so. Yeah. I don't think we're there yet, but I'm not as close to the regulatory, like, I mean, I don't know how quickly that happens and when that will be priced in.
Yeah.
Which on regulation, should we talk about like some interesting developments on, I mean, there's a few other like newsworthy stuff that we should talk about. Obviously the hack, there's the stablecoin proposal that impacts stablecoin issuers. There's a number of things.
Yeah. I mean, on stablecoins right now, so Vance had that tweet about regulatory, capture, et cetera, et cetera. But I mean, my understanding of what's happening in DC around stablecoins right now, spoke to someone last night who was in a lot of those meetings, was stablecoin legislation is moving forward. And actually, Casey at Blockworks had a great piece on this. It's stablecoin legislation is moving forward. I think we'll get something done. It's just that the industry is a little bit torn on what to do here. And I think specifically, don't quote me on this, I could get this wrong, but it's that it really comes down to like Circle wants one thing, Tether wants another thing. Circle is fully buttoned up, very regulated, has got all the licenses. Tether has not done a lot of that, but Tether's also in bed with, Cantor Fitzgerald and Howard Lutnick, is, part of Trump's very close inner circle. So there's these two competing factions and really two competing companies and ideas on this. And I think it comes down to, should these non-regulated entities or maybe regulated outside of the US be a really core part of the US payment and banking system, really? And should they be allowed to be one of the largest buyers of US treasuries in the world? So it seems like we definitely will get some stablecoin legislation. Will it be more? I guess Circle wants something in there that says you have to be very buttoned up and very licensed, and and I understand Circle's point here. There's a lot of like, Vance had that tweet and other people piled on being like, Circle's lobbying against the industry. It's like, honestly, everybody's lobbying in DC right now. Coinbase is lobbying, Ripple's lobbying, hell, Uniswap is lobbying, everybody's lobbying, and everyone wants their own interest. That's what lobbying is.
For people that don't know, like there's key lobby groups, right? It's the Blockchain Association. But are there groups, right? Are companies directly going to DC and meeting with lawmakers?
Yeah, I mean, there are the trade groups, and then there are lobbying firms, right? So there are there are the lobbyists who will get paid by
the FS Vectors of the world.
Yeah, exactly.
To help you and facilitate introductions with congressmen. And you go in there, you talk to them and say, hey, listen, your constituent base really cares about Bitcoin mining because, there's, it employs 20% of the people in this county. You should care about that.
Exactly. So, and look, the big lobbyists, it's Ripple, I think, is the largest. I think Coinbase is the second largest. I think Andreessen Horowitz is the third.
Right.
I'm pretty sure actually Jump Crypto is the fourth largest.
Oh, interesting.
But other people are doing it, like Circle. I'm sure Tether is doing it. Uniswap is doing it. The Winklevoss twins, it's very normal.
So everyone is probably advocating for whatever is in their best interest. How Is this also the case for other industries like the oil industry or the pharma industry or the Israeli, lobby? You know what I mean? Like everyone has to. Lobbying is like a thing. Um, but how unified is the crypto front? Because I've heard that someone might go in there with a very specific agenda, and then it is very confusing when another person goes in with a totally different agenda. And because crypto is one of those things they don't even
Yeah.
understand. They understand oil, they understand pharma, but they don't understand like what this
So
digital
that is the role of the blockchain association in my mind. Like the blockchain association, I don't think is they're not lobbying in the traditional sense of lobbying, but they are kind of the talk. They're the voice of the industry in a sense here, and they're bringing everyone together. Some people are in the blockchain association. I think they have like 100 or 200 members, and some are not. But yeah, I mean, look, pharma spends, I would guess, $500 million on lobbying a year. Insurance is probably $250 million.
Mhm,
Oil and gas, I would guess, is 100 to 200 million. Real estate, probably 100 to 200 million.
mhm.
Airlines, probably 100 to 200 million. Like these things are big. It's a big industry.
Yeah,
Um,
yeah.
and big tech companies do it too. Like I think, Oracle, Microsoft, Apple, I would guess they all spend tens of millions a year on lobbying alone. Um,
Mhm.
So that's what's happening with stablecoin legislation. Yeah, I mean the big thing with Bybit. Let's talk about Bybit. So the big update from our conversation last week is that everyone thought this was Bybit really screwed something up. And by the way, I don't want to put all the. I think Bybit came out with this report. They came out with a Bybit hack forensics report. The report basically put a lot of the blame on actually Safe, previously Gnosis,
Mhm,
and they said the compromise was basically they said the compromise was not Bybit, but actually Safe's servers, and
mhm.
they hot swapped. I think let me think about that. I think
Steve had a good tweet about it.
they hot swapped the Gnosis Safe UI with JavaScript code that only targeted Bybit's cold wallet. So, and you could actually, if you've ever used like archive.org or like the Wayback Machine,
Mhm,
you can actually go look at the code on their front. So basically, they hacked the front end. And this allowed I'm like 80% sure I'm going to get this right, but it's a little
mhm,
beyond my technical understanding. It's like the UI of Safe was compromised, which then allowed access to AWS and their S3 bucket. And you had this malicious JavaScript from Lazarus Group, which is obviously North Korea. There was malicious JavaScript that got pushed into the S3 bucket, uh, and that eventually got distributed. And then the malicious JavaScript code targeted specifically the Bybit contract address,
mhm.
which then changed the content of the transaction during the signing process.
Yeah.
So, not good for Safe. Honestly, I don't. I mean, say, like, yes, this is bad for Safe, but like, I think the industry is realizing how big of an issue Lazarus is here. And like I think I think this is the wake up moment for people like Tay. Like just big shout out to Tay, Zach XBT. They've been saying for a while like just how bad Lazarus in North Korea really is. And I think
Yeah.
people think like, yeah, sure, it's an issue, whatever. But like, man, I'm pretty sure North Korea is just out there sitting in some big protocols right now. Like this just tells me they are so much more sophisticated than any of us have realized. Um, and I mean, I think it's a big problem for the industry. I really think it's a big problem because first off, you start to lose trust in some of these things, and that's very
Mhm.
bad. But second, like if you're the US government and you see that we just gave North
Yeah.
Korea $1.4 billion and they're selling it off through mixers, like it's a bad look.
Yeah.
It's a bad
No,
look.
no, absolutely. I mean, I think this is in large part, what Tornado faced because it
Yeah.
allowed the laundering of. I think it was
It,
at the time it was the hack of Sky Mavis, their chain running,
yeah,
where they
yeah.
laundered a bunch of funds. No, it's very concerning. Tay, I have an immense respect for. She has her way of communicating that is very jarring, but she is right. I mean, she is buttoned up and she's been on the trenches. Like you listen to Tay, you and I think it's in many ways like the Lazarus Group has been just exposing all the different holes of the tech. Um, the I think like of course now that this attack vector has been exposed, like a few things have happened that are positive. One, you understand that this is now a possibility, and like before, people just assumed, oh, Safe is just the sacrosanct, the best way to go about signing like a multi-sig. Um, the And so it just reinforces Tay's point, which is you can't assume people to like read zeros and ones and then understand what the contract's going to do.
Yeah.
So if I'm not a security expert, but I found two things a couple of things interesting. Bybit then created the Bounty website and put pressure on everyone in the crypto ecosystem to cooperate and to freeze assets. And very clearly you expose people that are not, and so that exhibits bad actors very quickly.
Yeah, but
And
they do, the main person Tay was calling out here is Thorchain, right? Look at
yeah, yeah.
look at, let me show you this data. So 150,000 ETH, 7,000 addresses, 10,000 transactions, and 1.5 billion dollar Bybit hack. This is, if you look at this volume right here, this is the Thorchain volume. I mean, you can clearly just see like where North Korea is moving. Is clearly just selling, is using Thorchain to move this out. And this is Tay saying 200,000 ETH has moved from Ethereum to Bitcoin so far. That's $500 million in 5 days.
A third of it. Yeah.
We deserve to be cooked for this. And there was this funny thing. It was, someone said today was the most volume Thorchain's ever done in one day. And it's like, yeah, I thought John Charbonneau had the best meme. It's like, where's the volume coming from? Like, where's the volume coming from?
Yeah, I mean, this is where like, what is the response of Thorchain to that?
The response was not. I mean, basically, Tay and this guy Michael Perkin really got into it. I mean, Tay is like, let me be extremely clear about something. Thorchain have currently only frozen legitimate people's funds. You failed to not freeze funds. You failed to freeze any stolen funds. You failed both ways. Grow up. You're a disgusting joke. That was her take.
Yeah, we've gone back. We've of course you've represented my position.
This was Thorchain said, I think you've misrepresented my position. I wish we could have an adult conversation. I want to bring criminals to account just as much as you do. And she said, bitch, 95% of all stolen Bybit funds are going through Thorchain. That's 95% of over 200,000 ETH in 6 days. That's over $100 million per day of stolen funds on a single route. Don't you dare come up with some high horse thing.
Yeah.
And I'll save the.
Yeah, this is the instance where like, we're building. There's permissionless protocols, but in this particular, like, we keep coming back to these instances where like you have to act, you have to freeze. Like it's of course you're not going to roll back. Like, in the early days, like you probably would have entertained a discussion around rolling back the chain. People have done it, right?
Yeah.
But you freeze. Like here's the thing. Like, if you're Thorchain, if you're a protocol, and you're going to sit on a high horse and say, "Oh, we're not going to freeze," because then it diminishes credibility of what permissionless is, and then developers are not going to feel the certainties and the guarantees that they're going to be deploying on a immutable code and all this, valid theoretical arguments. But then as an industry, we use USDC, and USDC has a stop feature. Like, do you not like that? I do. Like, that's just like, people get into these discussions of like, oh, I get the protocol, but it's like, then why do you, then if you're Michael, and you've ever interacted with USDC, then you're like, then what's the difference? But you're going to use like some sort of purely pure ETH backed coin?
Yeah.
Like, no. So no, I feel very strongly about, like, as an industry, of course, like a lot of times, like, these theoretical debates and arguments like are put to test, and people are not practical enough and are not focused on what the most important thing is, which is we are here to create a very marginal step, like a step function improvement to the current financial system, to the current other systems. That doesn't mean like, but we shouldn't be like lose the forest for the trees. Like, is it going to be perfectly immutable and 100% sensor resistant? Like, no. Like, I think that's like a pretty delusional take. I think you have to just be very practical and say, what is the most important thing? I think the most important thing is to guarantee the integrity, the convincing people to use these systems, because they are better. Unequivocally, they're better. But I think taking the position that like this pie in the sky, like perfectly decentralized, perfectly censorship resistant system is how we're going to like thrive and win. I don't think that's without a very clear response, because facts are a huge problem. And if this continues to happen, like it sets us back many, many years.
Yeah.
You know what I mean? Like you could almost imagine at the board level of BlackRock saying, "Hey, Larry, what's going on with that hack? It's a lot of money in North Korea. Like, are you sure you want to work with these people? Like, they seem pretty loony. Like, like they could have frozen funds, but they didn't because what? Like, I don't understand. I don't get it, Larry. Like, maybe we should just, you know, Larry, just drop the whole Bitcoin to 250K, 700K thing. Let's just like not risk it. And if two or three of these things continue to happen, I think Larry's going to feel a bit more pressure. Larry as like
Yeah,
the chief
yeah, yeah,
evangelist,
Larry.
our Lord Savior.
Yeah, Larry.
You know what I
Um,
mean? Like,
yeah,
yeah,
Larry.
Larry,
No,
maybe we should
I think
not
this
be
is an issue.
interacting on these crazy
I think
systems.
North I think I think North Korea is an issue. Like, look, this is Jito. This is Lucas from Jito. Someone said squads go burr, and he
Yeah.
said, unfortunately, if the squad's front end
Yeah.
deployment API key got leaked, it would probably suffer the
You
same
to be
fate.
fair, you could interact like Hasib's tweet, like you can interact directly with a contract. The problem is most people don't, right?
Yeah, yeah. So I mean,
Go
I
to
think we
CZ's
got
profile.
lucky. Who's
Go to CZ's profile.
okay?
I wanna open up a tweet about go down. He had a tweet around this particular incident of safe. Go
Mm,
down. Okay,
yep.
here. Read that and tell me what you think.
Okay, I'll read it out loud. This is CZ talking about quote tweeting Safe's blog
Mhm.
post. I usually try to not criticize other industry players, but I still do it once in a while. This update from Safe is not great. It uses vague language to brush over the issues. I have more questions than answers after reading it. One, what does compromising a safe wallet developer machine mean? How did they hack this particular machine? Was it social engineering, a virus? Question mark. How did a developer machine have access to an account operated by Bybit? Some code got deployed from this developer machine straight to production? Question mark. Three, how did they fool the ledger verification step at multiple signers? Was it blind signing, or did the signers not verify properly? Four, so was 1.4 billion the largest address managed using Safe? How come they didn't target others? By the way, great question. I think we got really lucky that it was only 1.4 billion. And five, what lessons can other self
Mhm.
custody multi sig wallet providers and users learn from this?
All that are really good questions. Go up.
Yeah.
Uh, Question 3. Um, he's never used safe before.
You're saying because by the way this question was asked. Yeah.
Yeah. It very clearly tells you. And he had another tweet about using a decentralized exchange, and it's like it's very apparent that he hasn't. And
Where's the decentralized? Where's the Dex thing? Or it's a while ago.
yeah, it was like a couple days ago. And it was like,
Uh,
dude, have you ever used it?
yeah.
But
I
like,
mean,
like
it was
three,
same.
three, like the verification steps, like you're signing a transaction, but the transaction will not like tell you the like you know what I mean? Like you're not fooling the ledger verification step. There's like no verification, just like verify. You're signing an
Yeah.
actual transaction is the point.
Yeah, yeah. I mean, this wasn't on Ledger to verify, but by
No,
the
no,
way,
it was nothing to do with
I think
ledger.
it is kind of on Bybit too. It's like I know everyone's talking about Safe's front end, but Bybit needs, I mean, and not just
Uh,
Bybit, every centralized exchange needs to catch a pretty, this was actually a pretty simple hack from what once you get to the signing part of this, I think you got to be able to, there's really, I think it was Hasu who said this
Mhm.
perfectly. There's no excuse for not verifying message
Exactly.
integrity on a second air gapped machine when moving
Yeah.
$1.4 billion of funds. You
Yeah.
just
Yeah.
got to do that if you're an
Yeah. The
exchange.
whole point of a multi-sig is you have like 3 or 4 or n of
Yeah, yeah,
X signers to reach quorum to compose and submit the transaction.
yeah.
At some point, everyone should like someone in there should have been sophisticated enough to like understand what the zeros and ones, like what that contract was going to do.
My thought on this is I mean, if you were sending okay,
But
this is,
like there's certain wallets like that will verify exactly what will happen and will show you the end result of the transaction. There's
yeah.
a there's a few out there that will simulate. Basically, it's called a transaction simulator. I think that the thing
These
that
guys are the best at it. Blockade, they're these Israeli
Mhm.
security guys. They're now natively embedding inside of wallets.
Exactly. So
They're
you should embed this in every single wallet, including a multi-sig. Like, not because it's a multi-sig should you assume that you not do this step. Like you should in a perfect world, we have every single transaction is simulated and then and then you have to, as an added step, verify that you actually read that, understand that that is the behavior that you want from that transaction, right?
Right.
Because in a
Right.
in a perfect world, how could this been avoided? Saves keys got leaked, AWS or whatever, they were able to compromise that and then render the Bybit multi-sig signers a compromised version that they unassumingly signed this transaction, each thinking it's a normal flow, no problem. We're going to sign, nothing's wrong. We're signing. We don't have reasons to believe that our devices are compromised or like surface area is pretty narrow. Okay, fine. What a step there that I'm sure now they're going to embed, and every single multi-sig signer is now going to embed, is having some sort of system that has a transaction simulator, which is at the
Yeah.
end, even safe, if they're listening, they should have this natively like there for their customers, which is even if you have 100 signers, if none of them check what that transaction is going to actually do once it is approved by all the signers, then this will likely, you haven't solved anything. You've just introduced more delays to composing a transaction to reach quorum, but you still are exposed to, like, if none of those 100 people, 1,000 people, million people, it doesn't matter. Like, if no one's checking what the transaction is going to do, you're still going to be exposed to this. So, yeah, I would like to see more of that. Like, basically, the flow would be everyone signs, and before the last person releases, or when everyone goes and signs, says, assuming everyone signs and you reach quorum, this is what is going to happen. 1.3 billion is going to go to a different address that you want to send to. Is that really what you want to do? And the lights are like blinking, or certain logic, like, which is, and I've seen it in some bridges. I've seen it in some like transactions. I think even MetaMask has it. It's like, are you sure that you want it? Like when kind of like there's like a natural delay function, which is if for instance you want to send to one of your wallets and you just sign, no problem. But if you want to send to like an external wallet that you've never used before, it will be like, hey, Jason, just so you know, you're interacting with a wallet that you've never interacted with. Are you sure that that is what you want to happen?
Yeah.
Or this contract logic will be changed. You've never done that
I mean,
before.
this should be industry standard in
Yeah, yeah, yeah.
Phantom, Backpack,
But
MetaMask.
and you don't have to be a security expert to like start thinking like that, which is, I'm sure, like, I was thinking like, so this is a pretty clever hack. How did Lazarus like think about doing that? Well, they said, okay, maybe the IP address of like the signers, because I think they sign in a very periodic and very defined process. So there's no randomness. If there's no
Oh, yeah.
randomness, you're if there is no randomness, you become a bigger target. If you always take the route A to B from work, you can get kidnapped. Oh, at that point,
Hmm.
you always kind of have to just maybe take a different street.
That's why I
And
leave my home at the same exact time, same subway.
randomness produces more security
Yeah.
when you generate stuff, right? Okay, so fine. Don't ever maybe do it at the same time. But once they know that what these people do, then they were thinking, okay, well, what if we know that they're going to do it at this day, at this time, we can very quickly hot swap and do it without
Hmm.
triggering alarms.
Hmm.
So, but if it were random, they don't know. And so it becomes harder. It becomes easier for safe to say, oh shit, their systems would have picked up this, right? So that's one thing.
Yeah.
Don't sign at always the same time. Um, but also just they were probably thinking, not because it's a multi-sig, they're never going to check. They're never going to assume that the safe run was compromised.
Yeah.
That's
Yeah.
that's
It's
that's
pretty,
that's clever. That's
it's pretty
very
smart.
clever.
It's smart. You know who else is should really look at this closely are funds. Funds who are
Yeah.
sitting on a lot of capital, because you get into a really, I mean, you know this 10 times better than me, but like maybe a portfolio
Mm,
manager gets in a nice flow with an analyst
yeah.
and says,
Yeah.
let's make this trade. And maybe you start to notice that like it tends to happen like Wednesdays around 10 a.m. The
Mhm.
analyst gets pinged and boom, email
Yeah.
comes in, approve the Fireblocks transaction. Boom,
Yeah.
Wednesday,
Yeah.
10
Yeah.
a.m., approve the Fireblocks
Yeah.
transaction. Boom, Wednesday.
Yeah. Yeah.
10 weeks in a row. It's around,
There's a
and then
great
the analyst sees it in the 11th week
yeah. Yeah.
and
You
auto
just
approves it.
you're
And
on you're on autopilot.
yeah.
There should always I mean, there's a great book called The Checklist Manifesto by Atul Awande. He's a doctor, and he talks about you need to implement a checklist. And every single time you're going to do something, go through every single item in that checklist. And once they implemented that for pilots and doctors, it really
Mm.
decreased accidents. So
Oh,
I
interesting.
think that should be that should always be the flow. Like, you should have a very well defined checklist that you have to go through, no matter how many hours, how many times you've done it. You always kind of will do call the other person. Video, like real world things, like call the other person, verify, 2FA, that flow, like you just do it and you never deviate from it, no matter what. No matter if if the market's down 40% and it's a generational buying opportunity, like slow down, right?
For sure.
But yeah, the simulation of transactions, I think there are a number of players out there. Hopefully, if any one of these guys are listening, I would love to have a podcast. Tay, um, you know, maybe and other folks,
Yeah.
all the wallets. I think it's really on them. It's an opportunity to build a massive business, I think.
Agreed. I really think blockade is the thing. They just raised the reason I keep mentioning it. There's no like token. I'm not an investor. It's just a SaaS company from these like Israeli defense
Yeah.
people who are just trying to solve this. I think they just raised 50 million from Ribbit.
Mm-hmm. Yeah.
All right. Anything else?
No, we should probably leave it on a positive note. Anything positive, noteworthy? Well, I tweeted a lot about those. So the Collison brothers, the Stripe earnings came out, or I think there was like the annual conference day or something. Simon Taylor interviewed one of the
yeah.
Collison brothers. He specifically asked about the Bridge acquisition. Zach from Bridge, who has been on this podcast, go listen to that. Like reference that. So go on his Twitter and find his posts. A lot of really interesting things happen, like the the Bank of America stuff. Like pay attention to that.
Yeah.
All of these newsworthy things go unnoticed when markets like are very intensely like volatile, and so people like lose sight of that. They're very positive developments.
The last thing I would say, maybe just to end on this note, is if you are really miserable right now and you are not having fun, first off, I would get off Twitter. I would think about, are there things that do bring you joy in life? And I would actually lean into doing some of those things. Maybe it's cooking, maybe it's going to the gym, maybe it's going on runs. I would figure out ways to not tie your happiness to the price of crypto. What for me is very simple. Work on long-term projects with talented people, get more sunlight. Like I really get exhausted by Zoom meetings. So like I try to spend more time with people IRL. I don't really drink much. I don't have Twitter on my phone anymore. So those are just what works for me, right? But for you, it could be completely different. And I think you can tell Santi and I are having a lot of fun right now. If you don't find your fun, you won't last long here. And you just got to crypto. It feels like a short term. It actually masquerades as a short term game, but it's an incredibly long game here, right? A new industry is being built. It's going to take decades and decades. And if you get sucked into the day to day news stories and price action, you just won't make it. Honestly, find your fun. It would be my thing.
That's excellent advice. I mean, not to do a self show, but I shared with you something that I felt compelled to write to people because I've been in a bad spot. And it's exactly what you're saying. Like it was 2017, 2018. And I'm always reminded of that. I'm like, you need to develop an identity outside of work. It is essential. And I guess like I tweeted a long like rant about it, which you don't have to read. But some of the key things that I want to share with people that was so useful for me is, so say you go and talk to the closest people in your life, your parents, your siblings, your wife, your husband, or whatever, your partner, and you ask them, define Jason for me. Do you think they're going to say anything remotely related to your net worth? Absolutely not. They'll be like, he's a kind person. He remembers my birthday every time. He calls me every week. He brings me coffee. Like he's just a kind person. He's intensely passionate about what he does. Like I admire him for X, Y, and Z. The reasons why people admire you have very little to do with your net worth. But there was a time in my life where I didn't think that I was worthy of being loved until I reached a certain number. I'm going to say that again. I felt that I wasn't worthy of being loved until I reached a certain number. How crazy is that? I grew up in a great family. I got so much love from my parents. And yet I still went in that. And by the way, I had not lost money. I'd made incredible return. But I didn't, you know what I mean? Like you're anchoring to, I want to get to a billion. I want to become a millionaire. I want to do X. And the problem is that never stops. If you don't develop an identity, you're never going to feel fulfilled because, money doesn't buy that. Money is great, by the way. I'm kind of deeply skeptical of people that say that they don't need money. Money is an amazing energy that you can use to like share it with your friends, buys you time, maybe sometimes, but yeah, there's like some like focus on that. Like if you at any given point you're really in a bad spot, go call 5 people, friends, maybe even friends you haven't talked to in years, and ask them, hey man, like why'd you hang out with me? Like what about it? Like what do you like about me? Honestly, it's a just and they'll tell you something that is totally unrelated with the fact that you're like a degen and bought Doge at like the Pico bottom and the gig along it. Like they're not gonna care about that. In fact, they may complain about that. He's like, oh, you're just always busy in that shit.
Yeah.
You never give time anymore. You're like, so anyways, don't do stupid stuff. Fine, go watch a series or whatever. White Lotus is out. I haven't seen it, so maybe I want. But yeah, it could always get worse. By the way,
Could always get
always get worse.
All right, therapy session with Santi.
Therapy
I like
session.
it. No, that was a good message. No, that was a good message. We're over time. That's the pod. Thanks everybody. Hopefully it was a good note to end on. Yeah, we love hanging with you guys. We'll see you Monday.
Any good episodes coming out other than this one?
We've got on Monday. It'll be Dave Kalk and Pranav markets. It'll be really
that's gonna be really good.
Santi and I don't really know what we're talking about, but these guys do. Good markets, folks. So, anyways, we'll see you Monday.
David and Pranav are the people that I go to talk about markets. By the way.
Yeah. So, see you Monday, folks.
All right. Take care, guys.